Welcome, curious minds, to another deep dive.
Great to be here.
Today, we're plunging into the latest financial waters of, well, a major player in the Indian banking sector.
Kotak Mahindra Bank.
Exactly. We've just sifted through Kotak Mahindra Bank Limited's unaudited, consolidated, and standalone results for the quarter ended June 30th, 2025. Lots of numbers.
Quite a bit to unpack.
Our mission, as always, is to navigate these numbers and insights, help you quickly grasp what's most important, uncover maybe some surprising facts, and get truly well-informed without, feeling overwhelmed.
Like a shortcut.
Think of it as your shortcut to understanding a vital part of the Indian financial landscape. Can Kotak Mahindra Bank maintain its growth trajectory and asset quality in what feels like a tightening market, all while driving its one Kotak strategy?
Precisely.
Yeah.
And this deep dive should illuminate the key performance indicators, those strategic initiatives, and the broader context of Kotak Mahindra Bank's operations as they really push to transform for scale. We'll look at the consolidated picture, the bank's standalone performance, and importantly, how its various subsidiaries are contributing to that larger strategy.
Okay, let's unpack this and see what truly stands out for you.
Let's do it.
So what's the headline here? What's the overall story these Q1 FY26 results are telling us about Kotak Mahindra Bank's performance?
What's fascinating here is the immediate picture it paints. For the first quarter of fiscal year 2026, ending June 30, 2025, Kotak Mahindra Bank reported a consolidated profit after tax, or PT, of 4,472 crore.
Okay.
Now, on the surface, that looks like only a 1% year-on-year increase.
Right, which doesn't sound huge.
Exactly. But the real insight comes when you realize this figure excludes a specific significant gain from the Kotak General Insurance, or KGI, divestment back in Q1 FY25.
Ah, okay.
So excluding that one-off event gives us a much clearer picture of their core, operational growth, which is actually quite solid.
That's a really important distinction. So, okay, when we look at the bank itself, the standalone entity separate from the wider group, what were the standout numbers for its core banking operations?
Right. On a standalone basis, the bank's PAT for Q1 FY26 stood at 3,282 crore.
Okay.
Their net interest margin, or NIN, that's, the difference between interest earned on loans and interest paid on deposits, basically how profitable their core lending is, stood at a pretty robust 4.65%.
4.65, okay.
And their CASA ratio, which shows the proportion of low-cost current and savings account deposits, that's a critical measure of funding stability, was 40.9%.
Right, those are definitely key indicators for any bank. Connecting this to the bigger picture of their financial health, what do their consolidated return on equity and return on assets tell us? About how efficiently they're using shareholder money and their overall assets.
Well, if we connect this to that bigger picture, the consolidated results show a return on equity, ROE, of 11.13%.
Okay.
And a return on assets, ROA, of 2.03% for the
Wow.
quarter. These are, pretty healthy figures that indicate efficient capital utilization, especially for a bank of this scale.
Right.
We also see the book value per share increasing to 829. That's up a solid 17% year-on-year from 710 in Q1 FY25.
17%, wow.
Yeah, and group assets under management, AUM, reached a massive euro 750,143 crore.
Huge number.
Showing an impressive 18% increase year-on-year. This really signifies strong growth across their entire portfolio of financial services.
And before we dig deeper, what's the significance of the audit report that came with these results? Does it give us an extra layer of confidence?
Absolutely, it does. These results were approved by the board on July 26, 2025, and they underwent a limited review by their joint statutory auditors, Deloitte Haskins & Sells, and KKC & Associates, LLP.
Okay.
And the key here is they issued an unmodified review report,
Right.
which is essentially a clean bill of financial health, confirming the numbers are presented fairly. It's a crucial stamp of approval for investors.
Definitely good to have. Okay, let's zoom in then on the bank's standalone performance. How did its core profitability metrics look? Especially its net interest income, which, as you said, is really the lifeblood of a bank.
Net interest income, NII, for Q1 FY26 increased to 7,259 crore. That's up 6% year-on-year from 6,842 crore in Q1 FY25.
Okay, 6% growth there.
Yeah, and this steady growth in NII, alongside that healthy 4.65% net interest margin we mentioned, suggests they're effectively growing their core lending business while managing their cost of funds pretty well.
Makes sense. Beyond just interest income, what about other revenue streams and their overall operating profit? How diversified are their earnings looking?
Well, fee and services income contributed a significant euros 2,249 crore this quarter,
Okay.
which shows good diversification beyond just lending activities. Overall, the bank's operating profit for Q1 FY26 increased to 5,564 crore. That's up a solid 6% year-on-year from 5,254 crore in Q1 FY25.
Right.
So this tells us they're managing their operational costs well while still expanding revenue.
Okay, shifting focus a bit to deposits. These are crucial for any bank stability, right? So how did Kotak Mahindra Bank's deposit base grow? And what was the breakdown between the different types of deposits, like current, savings, term deposits?
Right. Average total deposits grew to 491,998 crore for Q1 FY26. That's a 13% year-on-year increase.
13%? Okay.
What's interesting in the breakdown, though, is the strong 19% year-on-year growth in average term deposits. They reached 303 crore.
Wow, 19% in term deposits.
Yeah. Average current deposits grew 9% to euros, 67,809 crore, and average savings deposits saw a smaller 2% rise to 124,186 crore.
Hmm.
So while the CSA ratio, which is usually preferred for its lower cost, stood at that 40.9%.
Which is still decent.
It is, but the significant term deposit growth indicates they're successfully attracting longer-term funds, albeit, potentially at a slightly higher cost of funds for the quarter, which came in at 5.01%.
Right, that makes sense. So with that kind of deposit growth overall, what does this tell us about their customer reach, their ability to attract new clients?
Well, the bank's customer base has definitely expanded significantly. It reached 5.4 crore customers as of June 30, 2025.
5.4 crore.
Up from 5.1 crore just a year prior. So this consistent growth in customer acquisition is a strong indicator of their expanding market presence and, well, their appeal.
Okay, now let's talk about the other side of the balance sheet, the loan book and asset quality. How did their advances, their loans perform? And crucially, what about the non-performing assets, the NPA figures? Always a key concern for banks.
Yes, always. Average advances for Q1 FY26 grew by a healthy 14% year-on-year.
14%.
Shows strong demand for credit. Net advances specifically increased 14% year-on-year as well to 444,823 crore as of June 30, 2025.
Okay.
It's important to note, though, that unsecured retail advances, including things like retail microcredit, constituted 9.7% of net advances as of June 30, 2025.
Almost 10%.
Yeah, and this is a segment, many banks are expanding into, but it definitely requires careful risk management.
Absolutely. Any specifics on which loan categories saw particularly robust movement?
Yeah, we saw really robust growth in home loans and loan against property, or LAP. That was up 19% year-on-year.
Strong housing demand, though.
Seems like it. And personal loans, business loans, and consumer durables all grew impressively at 20% year-on-year.
20%.
Reflecting, I think, consumer confidence and business activity. Even tractor finance saw a healthy 17% year-on-year growth, showing strength in the rural economy, too.
Interesting mix. So what about asset quality? That 14% growth in advances, especially with almost 10% in unsecured, could potentially put pressure on NPAs. How did they manage that?
That's the key question, right? Despite the strong growth in advances, the gross non-performing asset, GNPA ratio, was 1.48%.
1.48. Okay.
And the net non-performing asset, NNPA ratio, was 0.34% as of June 30, 2025.
0.34 net.
Right. So while that GNPA is a slight uptick from 1.39% a year ago, it's still well within healthy limits for a bank of this scale, especially given the growth in their loan book.
True.
And the net NPA actually saw a slight improvement from 0.35% last year.
Oh, interesting.
Their provision coverage ratio stood strong at 77%. That means they've adequately set aside funds for potential bad loans.
Good buffer.
Exactly. It's also worth noting that fresh slippages in Q1 FY26 were 1,812 crore, but importantly, 155 crore of those were upgraded within the same quarter.
Ah, so quick recovery on some of those.
Yeah, indicates pretty efficient recovery processes.
Okay. Moving beyond the main banking operations then, Kotak Mahindra Group is, well, it's a financial conglomerate, isn't it? With a diverse set of businesses. How are the subsidiaries contributing to this overall picture? And how does that one Kotak strategy really deliver value?
Yeah, this raises that important question. How does that integrated one Kotak strategy actually translate into performance on the ground? And we see strong, diversified contributions across its businesses. It's quite impressive, actually.
Like what?
Okay, so Kotak Securities. Their PID increased by 16% year-on-year to 465 crore.
16%.
They hold an impressive 12.8% overall market share in Q1 FY26, with a really strong digital footprint. Over 96% of orders are DIY do-it-yourself. This shows their strong push into accessible, self-service platforms like Traders Cafe and Kotak Stockshala.
Right, making it easy for customers.
Then you have Kotak AMC and Trustee Company. They had a phenomenal quarter. PAT up 86% year-on-year to 326 crore.
86%.
Huge jump. Their equity quarterly average assets under management, QAAUM, was up 24% year-on-year. And their monthly SIP inflows for June 2025 were 1,792 crore, up 15% year-on-year.
Strong slows there.
Definitely. Their strength in areas like arbitrage funds and domestic fund of funds is clearly paying off.
Okay, who else?
Kotak Mahindra Life Insurance recorded an astonishing 88% year-on-year increase in PAPI to 327 crore.
Another huge jump.
Yeah, with a 14.7% year-on-year growth in AUM to 96,581 crore. And strong individual renewal premium growth of 11.9% indicates good customer loyalty and product stickiness.
Seems like the insurance arm is firing on all cylinders.
It really does. And even Kotak Mahindra Prime, their vehicle financing arm, saw PAT up 17% year-on-year to 272 crore, with advances growing a healthy 16% year-on-year.
Right.
So this diversification clearly adds resilience and, well, multiple growth engines to the group. It's not just the bank.
It really sounds like they're not just growing, but they have a genuinely strong, maybe even predominant market position in several key areas across India.
Yeah.
What's the snapshot of that dominance look like?
They truly do. They are recognized as among the leading financiers for tractors, commercial vehicles, and construction equipment among banks in India. That's significant.
Yeah.
Overall, they are ranked as the #4 private sector bank in India, with a market cap of 4.30 trillion as of June 30, 2025.
Number 4, private bank.
But here's what's truly surprising, I think. Their private banking arm, Kotak Private, manages wealth for an astounding 60% of India's top 100 families.
60%. That's incredible market penetration at the top end.
It really is. And on the investment banking front, Kotak Mahindra Capital was ranked #1 in equity capital markets for the 3rd consecutive year.
Okay.
So these figures truly highlight their deep entrenchment in the entire Indian financial ecosystem.
And geographically, how widespread is their physical presence? Across India and globally? I mean, it's one thing to have a strong digital presence, but physical reach still matters, right?
Absolutely, it does. And they have both. As of June 30, 2025, the group has 5,440 total group branches in India.
5,400.
Kotak Bank specifically has 2,154 branches with a significant presence in metros, that's about 46%, and urban areas, around 22%.
Right.
They also operate 2,927 ATMs and 11 currency chests. And globally, they have a footprint. International offices in New York, London, Mauritius, Dubai, Singapore, and Abu Dhabi, including actual bank branches in the Dubai International Financial Center, DIFC, and India's own gift city in Gujarat.
Okay, so a real mix of domestic depth and international reach.
Exactly. This combination of physical and digital reach creates a pretty powerful network.
It's great to see such strong financial performance, obviously, but in today's world, how is Kotak Mahindra Bank addressing critical areas like ESG, environmental, social, and governance? This is becoming increasingly important for stakeholders, investors, everyone.
Indeed it is. And the bank seems to have a robust ESG framework clearly integrated into its operations, not just bolted on.
How so?
Well, on the environment front, for example, they have a board-approved green and sustainable finance framework. They report over 7,900 crore in their green asset book as of March 31st, 2025.
Okay, substantial amount.
And they're committed to resource efficiency. They have 16 LED or IGBC certified premises using renewable energy at key corporate offices. They've also actively engaged in ecological restoration, planted over 1.5 lakh saplings, initiated restoration of 11 additional water bodies in FY24-25. So tangible actions there.
Okay, good environmental focus. And what about their social and governance efforts? How are they impacting people and ensuring good corporate citizenship?
On the social front, they're committed to diversity. They report 26.4% gender diversity at the group level, with an aspiration to reach a third of the workforce.
Right.
They also highlight financial inclusion, serving 2.3 million women active microcredit borrowers as of March 31st, 2025.
Hmm.
That's a potentially powerful social impact.
Absolutely.
For governance, they emphasize their tenured senior management team average of around 20 years with the group. That provides stability and institutional knowledge.
Yeah, experience counts.
And their information security management system is ISO/IEC 27001 certified, which is crucial for data security in banking. Plus, they've received an MSCI ESG rating of AA as of 2025.
Double A. That's a strong independent endorsement.
It is, shows their sustainability practices are being recognized externally.
It really sounds like technology is truly at the core of their strategy to transform for scale. What's their strategic approach to digital transformation? What new initiatives are actually making a difference for customers?
Digital experiences are absolutely central to their strategy. You can see it everywhere. They've introduced a new Kotak Bank app that allows easy toggling between personal and business accounts.
Handy.
And crucially, enabled UPI compatibility for international numbers. That's a significant step for global transactions, making life easier for NRIs and others.
Big deal, yeah.
Kotak A11 then, their full-stack digital banking proposition, now features video verification for address updates and an in-app journey for the Atal Pension Yogana scheme, making crucial government services more accessible digitally.
Reducing friction?
Exactly. Kotak Neo for trading offers improved onboarding and optimized digital journeys for margin trading funding, streamlining the investment process. And for corporates and SMEs, the Kotak Fin Enterprise Portal provides a unified view of services and is even enabled for Gift City customers now, creating a seamless experience across different platforms.
So it's digital across the board, retail, trading, corporate.
It really demonstrates their strategic focus scale. That one Kotak integrated approach, prudent risk management, placing technology right at the core, empowering their colleagues, and importantly, relentless execution excellence.
Okay.
They are clearly trying to build sustainable value for stakeholders by putting the customer at the center, aiming to be the primary banking relationship for more people, and fostering inclusive and responsible growth for the community.
That was truly a deep dive into Kotak Mahindra Bank's Q1 FY26 results. We've seen a compelling picture of consistent growth in key areas like group AUM and customer assets.
Yeah, those numbers were strong.
Robust subsidiary performance really bolstering that one Kotak strategy, and a clear intentional focus on digital transformation and comprehensive ESG initiatives.
What truly stands out for me here is the bank's impressive ability to maintain pretty healthy asset quality despite that significant growth and advances we talked about.
Right, balancing growth and risk.
Exactly. And how its diversified approach through its subsidiaries provides remarkable resilience and multiple avenues for value creation, even in what seems like a dynamic, perhaps challenging market. They seem to be balancing aggressive growth with a prudent hand.
So for you, our learner, what does this deep dive ultimately mean? I think it highlights how a major financial institution navigates a complex and competitive economic landscape. They're doing it by strategically leveraging technology,
Big time.
maintaining strong fundamental financial health, and committing to sustainable practices. It's not just about the raw numbers, is it? But the thoughtful strategy behind them.
Absolutely. Which raises an important question, I think, for the future. As global financial markets continue to evolve so rapidly and competition intensifies, how might a bank's integrated one Kotak approach, balancing traditional banking with diversified financial services and strong digital innovation, how might that prove to be a more robust and sustainable model for long-term growth and stability compared to, say, a more siloed approach?
That's definitely something to mull over as you go about your day. Thanks for joining us on this deep dive.
My pleasure.
Until next time, keep learning.